Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and yesterday, replay of the day before. Bulls tried to run it up above the middle band, couldn't get it done. They made a lower high. They could not hold the middle band on a closing basis. So, the first step of our two-step process, if the Bulls want higher prices, failed. They need to close above the middle band. Need to test the middle band of support. That needs to hold the support, and then they can go ahead and go where they want to go. They can't get that done. And now what you're seeing in the overnight is not only the middle band act as resistance, but the 50-day exponential moving average act as resistance as well. The key today, our Globex low is 1594. I've talked to you the last couple days about the importance of the 1593 level. It's absolutely critical. And in my opinion, a break of 1593 on a closing basis opens up a potential test of the 100-day exponential moving average, which comes in today, right in the 1579, 1580 level. Okay? And a break of that area opens up a test of lows down at 53. Okay? I mean, if you're a bull and everything is up and it's always rosy and you go on Twitter all the time and all you talk about is you have to buy this and buy that, look, you can't get over the middle band. You've been trying for over a month. If you're not in sell rallies mode, you're not doing yourself any favors. Okay? And speaking of sell rallies, let's look at oil for a minute. As there were estimates flying around last night on Twitter of 105 and 110, 115. When you start to see that stuff, I assume most of you are on Twitter. It's probably how you found me. When you start to see those people come out trying to quote, do you a favor because, don't get short because this thing's going to, some crazy number, whether it's ES to 1725 and we're going to the moon, all systems go, or oil's going to 120. You have to take all that stuff with a grain of salt, okay? And the fear it strikes in your heart should make you pull up a chart, slap some third standard deviation Bollinger Bands on it, and try to scalp a trade. Because what oil would have told you last night as it hit 102.18 is that it hit the third standard deviation Bollinger Band. Hello. And what do we do from there? We retraced to $1.30. Now, could we ride the Bollinger Bands up to 105, 110? Sure. Why not? But in that moment, if you are a trader, you have to be thinking about that scalp trade, and you have to go ahead and make that trade. It's a low-risk trade. You set a stop above the high, and you ride it overnight a little bit. And, the reality is sometimes, if you're a full-time trader and this is your business, sometimes it means you don't sleep much. But we were trading this last night. So that's what I'm looking at today. Remember, we close at 1:15 today, so it's a short day. I really am expecting, I really was expecting an inside day today, but it doesn't look like we're going to get it. So the key is 93 on the down. On the up, you're looking at the middle band, which 1611, 1612 on a closing basis. Super thin market. It should have a bias to the upside. If it doesn't, you have to take note of that. Okay, everybody have a fantastic day. Enjoy your holiday tomorrow. We're back Friday with the jobs report. I'll have a webcast Friday morning, and that's always a big number in the market. But everybody have a fantastic 4th of July. Everybody over in Europe, enjoy your Thursday, and I will catch everybody Friday morning with another webcast. Trade them well, everybody.